April 7th, 2025, will be remembered by investors around the world as Black Monday. After all, only 4 times in history has the US stock market fallen by 10% in just 2 days, while Bitcoin tested a new annual low at $74,500. Of course, such a disastrous start to the week was caused by the ongoing trade war initiated by Trump. And it's now in full swing. Trump, as always, took a position of strength and began pressuring many countries, threatening that the United States would reduce its dependence on imports and stop paying out hundreds of billions of dollars each year. While India, the United Kingdom, South Korea, the EU, and in fact, according to the US Treasury, about 70 countries, have begun negotiations with Trump, China has firmly stated that it will not bow to US pressure for even a second. China strongly emphasized that it is ready to go all the way. Even after Trump threatened to impose additional tariffs of 50%, China did not back down. On the contrary, they responded that intimidation, threats, and blackmail are not the right way to negotiate, and that they are ready to push back. As a result, Scott Bessent angrily declared that China's escalation of the conflict was a major mistake, as it could derail Trump's strategic plan. Thus, the trade war is slowly evolving into a Cold War, a large-scale confrontation between Great America and China that the entire world will now have to watch unfold. Trump sees China as the main global competitor, which he failed to break back in 2016. And knowing the ambitions of the new US president, we are likely to face a protracted battle between the two hegemons. And that's the problem. The rest of the world is directly dependent on both the United States and China. This means that we are facing problems in logistics chains, supplies, and global trade. And this is a direct path to higher inflation. Larry Fink, the head of the world's largest fund, BlackRock, does not rule out that the markets may fall by another 20%. Meanwhile, Goldman Sachs has increased the probability of a recession to 40% for the second time in a week. And Finn himself said bluntly, "The recession has already begun." This point of view is supported by the JP Morgan management. The world is on the verge of a global economic reset, or as Trump himself calls it, a revolution. And in the coming months, we will begin to feel the first effects. With each new publication of reports, the tension only grows. But is it really that bad? Or is there any hope of a reversal? Trump recently hinted that China was supposedly ready for a deal. Maybe it was just another bluff, though. This video contains all the most important statements from Trump himself, the US Treasury, representatives of China, and the world's leading analysts. We'll figure out where this all leads, to a global crisis or to a temporary storm followed by growth. Because now everything depends on one person, on Trump. If he softens his rhetoric even a little, markets, including Bitcoin, could take off. As analyst Arthur Hayes said, it doesn't matter who wins this war, the People's Bank of China or the US Federal Reserve. In any case, the economy will be flooded with money. And that means one thing, Bitcoin will go up. Well, let's sum up the results of April 7th, which became the 5th Black Monday in history. The S&P 500 has fallen by 10% in 2 days. The Japanese stock market collapsed, the Chinese yuan sank, and Bitcoin again updated its annual low. On April 8th, the markets began to recover a little bit. There were rumors about readiness for negotiations from the EU, Britain, and India. Some delegations even flew to Trump for a meeting. The White House confirmed that the US president is ready to talk to everyone on tariff issues. In Trump's logic, everything is simple. The United States is the number one economy, and all countries trade with it. But his main pain is the $1.2 trillion deficit. America buys more than it sells. He believes that with the current duties, the United States is losing money, which means it is necessary to raise tariffs and develop domestic production. Trump has been particularly harsh against China. He claims that China is leeching off the US economy. He is convinced that a pressure strategy is the only way to force Beijing to give in. China responded with mutual tariffs. Trump is threatening new ones. The economy freezes in anticipation. Who will flinch first? The People's Republic of China has officially stated, "We are not looking for conflicts, but we will not be afraid either. The pressure doesn't work. We will protect our interests." Since April 10th, Beijing has been imposing 34% duties on American goods. This was supported by 6 chambers of commerce of the country. The White House responded harshly. Starting on April 9th, duties of 104% will be imposed on Chinese imports. Yes, you heard right, 104%. Trump said he was waiting for a call from Beijing and boasted in passing that a delegation from South Korea was already on its way to the United States to sign a trade agreement. Against this background, some countries affected by U.S. tariffs, on the contrary, are trying to establish relations with Washington. Vietnam, Cambodia, Malaysia, as well as India, China's main competitor in Asia, are actively engaging in dialogue. But China has gone its own way. Instead of concessions, we focus on the domestic market, and this strategy is working. While everything is in conflict mode with China, other countries are secretly restarting trade relations with the United States. Economic diplomacy in the style of whoever is not with us pays the toll. But now the main question is, how will Beijing react to the 104% duties? This is almost a doubling of the cost of goods. Such a measure could seriously affect Chinese exports, especially where margins are already on edge. But according to official statistics, 85% of Chinese exporters also sell domestically, and the domestic market brings them up to 75% of their profits. Even if exports suffer, the economy will survive. The main question is, who will win the tariff war? The Wall Street Journal believes that China wins in the long run. He will start looking for alternative sources of critical goods, and countries that are now trying to be friends with the United States may become disillusioned and switch to Beijing. Although, of course, it is easier for many to agree to Trump's terms and continue trading with both giants. But in fact, there will be no winners in this trade war, because with such economic conflicts, everyone suffers. Consumers, businesses, investors, and of course, the crypto market. World trade is not just about commodity exchange, it's a giant network where everything is connected to supply chains. To assemble the same iPhone, you need components from dozens of countries. China may be an assembly site, but the parts come from all over the world, and the materials for these parts come from other regions. Therefore, this is not a local conflict where you can just look from the outside. This is a systemic crisis capable of hitting the entire global economy. After the collapse on Monday, the crypto market showed a short-term rebound. But as soon as the news about the introduction of 104% duties appeared, everything went downhill again. In the meantime, the markets are in a fever again. Starting today, all the declared duties against China begin to take effect. How will this affect the rest of the world? Trade between the United States and China is worth $585 billion a year. America buys almost 3 times more from China than it sells. 440 billion imports versus 145 billion exports. The deficit is almost 300 billion. Trump started a war on tariffs in his first term, and even Biden did not abolish them, but rather increase them. In recent years, the United States has become less dependent on Chinese imports, from 21% to 13%. But the Chinese quickly adapted and moved production to Southeast Asia, Vietnam, Thailand, Malaysia. Now the goods go to the USA from there. The Ministry of Trade has realized this and plans to impose the same duties on these countries. And what does that mean? The boomerang will hit the United States itself. Prices for electronics, toys, batteries, smartphones, which account for 9% of all imports. All this will increase in price. The Americans will pay more. The iPhone is one of the prime examples. Apple has already lost 20% of its market capitalization in a month. Moreover, it became known that 5 planes with Apple equipment were sent from China and India in 3 days to catch up with the duties. But even if we manage to avoid some taxes, retail prices will still rise. And that's not all. China can use heavy artillery, rare earth metals. This is the basis of electronics, defense technology, and microchips. Beijing is already restricting exports of germanium and gallium, elements used in radars and thermal imagers. And in response, the United States may limit the supply of technology, chips, artificial intelligence. China is not yet able to produce top-level chips, and this is its weak point. Trump is also considering putting pressure on third countries, for example, Mexico, Vietnam, Cambodia, not to trade with China if they want to maintain access to the American market. And here it becomes clear why this applies to the whole world. The United States and China together account for 43% of the global economy. If these two giants engage in a full-fledged trade war, everyone will suffer. Investments will slow down, GDP will go down, production chains will be disrupted. For example, if China cannot sell its cheap steel to the United States, it will pour it into Europe. UK Steel is already sounding the alarm. This could destroy thousands of jobs in Britain. So it's not just about tariffs and iPhones. This is a matter of global economic stability. What will happen to the markets? Larry Fink, the head of BlackRock, said on Bloomberg TV, "A A 20% drop in the US stock market is quite possible, but he also noted that such moments are not a reason to panic, but an opportunity for profitable investments. According to him, I see it more as a chance to buy than as a sell signal, although he admits that the fall may continue. Finn also stated, the US may already be in recession. According to a CNBC survey, 69% of CEOs expect a recession in the near future. Half of them are already this year. Some analysts even call it the Trump recession. Jamie Dimon of JP Morgan agrees. The situation may worsen, and tariffs will only add to the pressure. Goldman Sachs has already raised the probability of a recession twice in the last week, first from 20% to 35%, then to 45%. But the most important thing is that everything now depends on one person. It is Trump who controls this process, and if he decides to ease the pressure, the markets will exhale. If not, we're in for a long and painful game. Any positive news from this front can revive the crypto market. Bitcoin forecast 2025. This week, Bitcoin dropped below $75,000 for the first time since November. Interestingly, there was fake news about the suspension of tariffs recently, and against this background, the price broke through $80,000. But as soon as the real information came out, the price collapsed again. BTC is currently in the demand zone, ranging from $77,000 to $73,500. This is a fair value gap, a zone where bulls can hold the market. It was here that the growth occurred in November, after Trump's words about the crypto. According to CryptoQuant, long-term holders hold for more than 155 days. They have become more active. Glassnode has recorded the movement of large wallets. Whales with 10K plus coins are buying BTC. Their accumulation index is almost 1, but small holders, on the contrary, are selling. This is a classic pattern. While weak hands are selling during the dip, strong hands are accumulating more. But there is an alarming moment and the transfer of old coins to exchanges. This may portend a correction. Analyst Will Clement believes that a long-term accumulation of Bitcoin is now being formed not only as a protection against inflation, but also as a reaction to geopolitics. Therefore, it all depends on who can withstand the recession phase. Because it's all part of a cycle. Even public companies are temporarily at a loss, and that's okay.